Always great to speak to Stephen Carter, Group Chief Executive of Informa. Stephen, OK, let's look backwards before we look forwards. You know all the questions are going to be about what's going on in the world as well. But, I mean, look, great set of numbers. Well, thanks. Good to be here. Yeah, I would say I'm happy to say that. It's a really great set of numbers. 25 was our best ever year as a business. We posted double-digit revenue growth. Our profits were up slightly higher. In fact, I was observing to one of our colleagues, we made just about more profit in 2025 than we made in revenue when I started doing this for a living. So it was an extraordinary year for the company. Our businesses were in growth. The internationalization of the company, the diversification of the company. We brought a whole range of new products and services to market. And the underlying demand for what we do in our two businesses, B2B live events at scale and original academic validated, authenticated content, both of those markets were strong. So we were pleased with 25, and the good news is we've come into 26 equally strongly. It's amazing. One could pester you and ask you all kinds of questions about AI on the latter point, and I'm sure we'll get to that, but on the former point as well, it's no coincidence that your shares have come off from recent highs since the saber rattling internationally got worse, and obviously the war in the Middle East began as well. How concerned are you about the short to medium term effects of this war we're seeing, US-Israel versus Iran? Well, look, there's nothing about this on a human level. There's nothing about this situation that I think any of us would be anything other than concerned about. From our point of view as a business, we started the year extremely well. In fact, our business in the affected locations trades early, so we have actually had a very strong opening to 26 in that part of the world. And we've already made some decisions to shift anything that was due to trade in the next 2 or 3 months to the back end of the year. So right now we have nothing really at a practical level in the affected areas that will trade. Our business more broadly is very diversified internationally, so I think we feel reasonably confident that the overall group will continue to trade very strongly. We'll continue to monitor the situation like everybody does. Yeah. But, September, October, November, December of this year, let's hope there's a path to peace and resolution. Because medium to longer term forecasts for your business are notoriously difficult to make. I mean, the conversations we had in and around COVID, it looked like the business was dead, but actually it's come back roaring greater than ever as well. So it's all about the timeline. But do you sense or do you have any concerns that the medium-term appetite for these trade fairs, these conferences, these events in the Middle East will be dented by what we're seeing here as well? There's a lot of people who move to the UAE, for instance, who are suddenly realizing where it is on a map. I don't. I mean, look, obviously aim off for my own bias. I'm selling my own book a bit, but I really don't. I mean, there's a reason why Dubai in particular is a global hub, and those reasons aren't going away anytime soon. The specific circumstances of what's going on in the world, clearly that has a short-term effect. But the dynamics of trade routes, where the world's trade patterns are, for all the reasons, frankly, why the markets are slightly spooked. But when the situation resolves itself, which one hopes it will do, speedily and safely, the underlying commercial patterns will return. And we are very well positioned in that part of the world, in the Middle East, in Africa, in Southeast Asia and Asia. And that's really been a big, and all of those locations have been a big engine of our growth. We weren't in those markets at all 10 years ago to speak of. We feel midterm confident. On COVID, you're 100% right. I spoke to many shareholders when I was refinancing the company who definitely were subscribing to the view that the game was over. What did we find post-COVID? People returned with real purpose to our products and services. So a pause and a return. The pause is short-term uncomfortable. The return will be strong. Right.
Stephen, there's plenty to be digesting and reacting to in the world as it is right now. But if I just look ahead slightly into the future, perhaps the not so distant future, and get your thoughts on how your business adjusts to a world where potentially a lot of jobs are replaced by AI, by agents, by essentially computer code, and AI agents don't gather in foreign locations for conferences and B2B exhibitions. How much of an impact do you think that will have, especially if we see financial services companies, professional services companies not employing anywhere near the number of people that they have at the moment.
Look, 100% right. We spend a lot of time doing that, as you would expect. Let's look forward 5 years and work backwards. What does it mean for our business? On AI, short term, we are early adopters of the operational benefits of AI because I would say it's more removing or reducing drudgery and process and freeing up time for innovation and speed to market. And in our business, that's very useful, whether it's marketing plans, product plans, technology, services, speed to market. So all of those benefits that you speak to are there, and we're embracing them. We've built our own operating AI engine. We're feeding it with all of our own proprietary data. That's allowing us to be much more effective in our selling, in our marketing, in our conversion, in our rebook rates, in our return rates. That's a lot of what's driving our growth. Do I actually believe it's going to replace human interaction? No, I don't. And in fact, I think you see that. Look at live events generally, sport, entertainment, music, B2B live events at scale. There's nothing, I think, that suggests that human beings don't value, personal interaction. And in a business sense, the value of it has gone up, not down. And ironically, one of the things we've definitely seen is that more remote working, more digitization in the professional working place, in white-collar roles, means that when there is an opportunity for an industry or a profession to gather and exchange in one place at one time efficiently over 5 days, actually the value of that's gone up, it hasn't gone down. So on fundamental structural disintermediation, to use a jargon phrase, I don't see that in live events. Quite the opposite.
And when you talk about using AI within your own business and the benefits that can bring, to what extent does that come at the expense of jobs? Because efficiencies usually mean you need fewer people to do the work.
Well, I'll tell you what I say inside the company. We're not looking to take jobs out. We're looking to take process out and free up time. We call it an AI time dividend. I mean, we took our margins up last year. We took our revenues up, we took our profits up, but we also took our margins up. And what we're allowing by deploying AI capability is more freedom to spend time on things that have a real impact that only humans can do, rather than the things that are really kind of white collar processes. Do I believe there will be some roles that will disappear over time? Yes. But in our business, I think we can manage that in a way through natural attrition or other things that really, for most of our colleagues, it's an opportunity. It really is an opportunity. It's not a threat.
Stephen, can I ask you a personal question? Not too personal, but you are now resident of the UAE,
Yep.
Even though I know exactly where you live in London. But you're a resident of the UAE, and you are being quoted as another one of these top executives, and dare I say it, millionaires who have left the United Kingdom to relocate elsewhere as well. People are calling it an exodus, and yet at the same time, in the last week, we've had an election victory for the Greens, who promised to tax the assets, tax the rich, tax the billionaires. Is the politics of envy driving wealth creators out of the United Kingdom?
I mean, look, we used to be, we are a UK-listed, UK-headquartered company. And, back when the vast majority of our revenues and profits came out of the United Kingdom and Europe. Now it is not the case. We are a truly international business. So what we've done is we are putting our leaders, myself, and indeed a good number of others, where the markets are. And the markets for us are increasingly in other parts of the world.
Steve.
So it's a location question. It's a commercial question. It's not a philosophical question.
Can I ask you a philosophical question then? Pretty much the same one as I just asked. Are the politics of envy driving wealth creators such as yourself, rather than yourself specific example, out of the United Kingdom?
Look, I don't know enough to know the answer to that question, but here's maybe an answer to a different question. Ultimately, you need growth and prosperity. Absent growth and prosperity, things get awkward. When things get awkward, then you end up with more of a divergence of opinion. And I say inside my own company, from day one, we're a growth company or we're nothing. And I think it's not so much different for countries. You've got to be a growth country. And to deliver growth, you've got to create the conditions for investment, innovation, risk, and return and reward. And if there's enough of that and there's enough to go around, then I think what you describe as the politics of envy goes down. If there isn't enough of it, there isn't enough to go around, the politics of envy goes up.
Stephen, nice to see you. Thank you. And by the way, I had a quick look at what it says your net wealth is. I'm pretty sure you're not a billionaire, but you're doing okay. So thank you, Stephen.
Nice to see you.
Very nice to see you. Lord Stephen Carter, who is the Group Chief Executive of Informa.